Join over 5,000 attendees for the largest AI event in Asia at Super AI Singapore, June 5th and 6th, 2024. Raoul Pal, Benedict Evans, Balaji Srinivasan, Edward Snowden, and over 150 others will join the industry's most influential to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a week from June 3rd through June 9th, with over 150 side events that will make for unparalleled networking opportunities. Visit www.realvision.com/superai for 20% off tickets with the code REALVISION or click below. Hi, everyone. Welcome to the Real Vision Daily Briefing. If you're wondering where we've been all day, we're hanging out over at the Crypto Gathering. If you want to join us, it's free. Just register at realvision.com/crypto gathering. And much of the talk on day one was about the impact of the Bitcoin ETFs. In case you missed it, 9 ETFs launched with BlackRock and Fidelity among the most popular. Both topped $1 billion of inflows within 5 days, and they're the only two funds across the ETF universe to attract more than $3 billion in their first 20 days, according to Bloomberg. As the money's flowed in, so have your questions. Many of you have asked, is now the time to invest? And if so, where do I start? Others who already own some crypto want to know, what do I need to understand about asset correlation? And what about other coins like ETH and Solana? To answer some of that, we are sharing a conversation originally reserved for our pro crypto tier with Ash Bennington and Martin Burgherr. Enjoy.
Welcome back to Real Vision Pro Crypto. I'm Ash Bennington. Today, I'm joined by Martin Burgherr, Chief Client Officer at Sygnum Bank. Martin, welcome to Real Vision.
Welcome.
It's great to have you with us. First time on the show, Martin. Tell us a little bit about what you do at Sygnum. We're going to talk a lot about the broader sentiment, all the things that are happening in crypto. But first, tee us off. Tell us a little bit about what you guys do.
Cool, thank you. Well, my name is Martin Burgherr. I'm the Chief Client Officer of Sygnum Bank. Sygnum is the world's first digital asset bank. And meanwhile, we merged into a global digital asset banking and technology group. And our mission is to empower everyone, everywhere to own crypto with complete trust. Now, our journey started actually already back in 2018-19, I think very early to actually provide something regulated. And back then, people thought that we lost our minds when we said we want to build a bank which offers crypto, because it was a largely unregulated space. But meanwhile, I think times have changed, and we are very successful in what we are doing. And I think the future is even brighter than the last 5 years.
So talking about where we are right now in this bright future, you guys recently commissioned a report in Q4 2023 to get the state of play in the digital asset space. What did you find? What's the outlook? How are you guys seeing things?
Yes, thank you. So we conducted the survey within our client base, and I think we saw that the people, have a very positive outlook on crypto. Interestingly enough, I think we saw that they are short term not as positive as, let's say, within a year's time frame. So interestingly enough, we conducted the survey end of Q3, and I think it pretty much reflects the sentiment at that time, right? The ETFs were not yet approved. Everyone was probably looking at what is happening with these ETFs. Will they happen? But the market sentiment back then was not yet that positive. And this is also why many of the people participating in the survey, they said they want to increase the crypto exposure, but not necessarily within the next 3 or 6 months, but rather within the next 12 months. And I think now we see actually that many of them had quite a sweet timing. I mean, maybe now we saw the first upswing of this new super cycle. And many of them, they probably started to slowly allocate capital, but we see that actually many of them, they probably only targeted to deploy more capital into the space now, or then also now in end of Q1, beginning of Q2.
So tell us a little bit about the demography of the sample and what that tells you about the potential framework that they're seeing this through.
Well, so in terms of the demography, I think it included actually many different kind of investors. So younger ones, private individuals, high net worth individuals, but also more institutional clients. So it's quite a broad scope of the survey. But I think what we can see, and also reflected in this chart, is actually that we see that there is a difference between people who already hold assets. So many of them, they plan only to incrementally increase exposure, and people who do not yet hold crypto assets. And we see that actually there, really a vast majority of them, they plan to allocate new capital or initial capital into the crypto space within the next 6 months to 2 years. I think this is really what we could see, that the people who are already exposed, they continue to be bullish, but the people who are not yet in the space, they are probably, they see even more need to increase now the allocation within the next 6 to 12 months.
So we should say, if we didn't mention it already at the top of the show, Sygnum is based in Switzerland. Is this a Swiss investor group? Is this more of an investor base more broadly throughout Europe, or are you global in that sense in terms of the data from this survey?
Yes. So yes, we are based in Switzerland and Singapore. So we are dual headquartered, but this survey included basically people globally. Sygnum is serving clients in more than 60 different countries. So it was quite a global scope that we covered with this survey.
Yeah. Um, so let's talk a little bit more about the context for this notion that you saw some potential shorter term hesitancy with longer term bullishness on the space. Does that suggest to you something about what the framework is or the perspective that these investors have as they look out across broader time horizons for the adoption curve on crypto and digital assets?
Yes. So, well, I think in my view, I think it is a reflection of that people really believe that, especially also institutional investors, that crypto deserves an allocation within an institutional asset allocation. However, I think it also reflects that the people were thinking it's probably a few more things need to happen so that they really can start deploying capital into the crypto strategy or into the crypto bucket. So I think was really in anticipation, for example, of these ETFs, also of the Bitcoin halving. I think a lot about regulatory certainty, which is about to get much more clear in the next couple of months and years, for example, with the MiCA in Europe and other crypto related regulations coming into force. And I think this is what they have on the roadmap, that they say, we want to deploy capital, also we want to deploy big institutional capital, but probably a few things they first need to be checked. I think with the ETF, which in my view was really a handshake between the Wall Street and the crypto space, I think one of these boxes was ticked. And I think this is now also why we see a lot of this money, which was waiting on the sidelines, is actually now flowing into the space and is already driving the prices.
Yeah, I should say we were talking a little bit about this before we got on air today, how there was this kind of buy the rumor, sell the news effect, and now this rebound. By the way, I should say we're trading right now on Bitcoin 49,757 on my screen. We might get to 50,000 during this conversation. Hey, Martin, let me
Oh,
ask you
oh,
something about this idea of the handshake. One of my friends over the weekend was kind of teasing me a bit, poking me a little, saying, "Hey, how do you feel about this, man? It looks like Bitcoin's just trading, it's trading with the Nasdaq. Correlations go to one." My response was kind of like, "Well, if that happens in the short term, like, who cares? I'm not sure that that has a real sort of fundamental basis. Look, assets correlations trade on and off over time. You see that bounce around." But I'm kind of curious, Martin, just to get a sense of how you guys, and we'll start with Bitcoin, we'll talk about some of the other ecosystems as well. But I want to get a sense of how you think about Bitcoin more broadly. Is this something that you guys think about? And it's interesting, of course, to just have someone on with a Swiss background. Is this something that you see as kind of a digital gold off the grid asset, a hedge against central bank monetization or other types of intervention in the money supply? Talk a little bit about how you see this in terms of the 50,000-foot macro view for Bitcoin.
yes. Well, so I mean, definitely. I mean, Bitcoin is by far the biggest digital asset, and I think it deserves a lot of space within a crypto allocation. Now, if we look at our client base, I think people, they have very different views on why they want to hold Bitcoin. I think some of them, they really have this macro view, where they say we have high inflations, we have a monetary policy which is quite loose. So with this inflation, I think it's good to have a scarce asset like Bitcoin. Others, they see it really as a tail hedge, where they say it could be a mean of exchanging value for a really tail event. Let's say if for example, the banking system would not work as seamlessly as it typically does.
Right.
Others, they perceive it as this digital gold. And this is the main purpose why they believe in it. So I think many people have different reasons why to hold Bitcoin, but I think all our institutional clients, they see a reason why they want to hold Bitcoin. So I think there are hardly any institutional clients who access the space and say, we don't want to have a Bitcoin allocation and, for example, only go into an Ethereum, Solana, or layer twos. They also invest into these assets, but Bitcoin is always part of it. Now, the correlation with NASDAQ, we also actually looked at this from a quantitative perspective. And we see that there are, of course, times where there is, in general, a risk-on environment where the markets are quite bullish. We saw this, for example, back in 2020, 2021. I think when it started, it was also quite a bullish sentiment, and this was then fueling initially the rally of NASDAQ and also Bitcoin. And I think the opposite happened with the tightening of the monetary policies beginning of 2022, that there was a general risk off, and then we saw some short-term correlation between equities and Bitcoin. But I mean, I would answer probably the same that you answered. I mean, it's short-term correlation. We see long-term correlation between Bitcoin and, of course, equities or the Nasdaq is not high, and I also don't expect this correlation to become much higher now in the near future.
Yeah, I mean, obviously, one of the cases and one of the reasons why investors seem to be interested in this is this idea of getting non-correlated returns. But let me jump into something that you touched on in your remarks there, which is the view of institutional investors. I'm wondering, Martin, if you've seen any dissonance or perhaps differentiation in between institutional investors versus retail investors in your survey. Tell us a little bit about what you're hearing on the institutional side and what makes those investors see this space differently, if they do.
Well, I think in general, we see that high net worth individuals or private individuals, they are probably more driven by emotions than really institutional investors, which is also, of course, related to the investment process, which is very different from an institutional player than from an individual, right? If an individual wants to buy Bitcoin, this Bitcoin is bought now. And an institution has, of course, a certain investment governance. There is a process behind. You need to make sure that Bitcoin is something real and worth investing. So I would say in general, we see that the private individuals, they are much more sensitive to short-term volatility, whereas the institutionals, if they do an allocation, they do this typically for a longer term. They don't have weekends. So when they put money into, for example, Bitcoin, they also hold on to it because they look at this for a very long time frame. And I think this is a big difference that we see from the behavior that when the markets pick up, we see first we see the flows from the private clients coming, and then later on we see follow-on investments from the institutional clients. But on the opposite, when the prices are coming down, then we also see that the private clients, they sell much earlier than the institutional clients. So they then hold on to these assets because they also, I mean, they have deep pockets. They don't get nervous if they have a drawdown of 50%. I think this is definitely something that we can see, that there is a different behavior between institutionals and private clients within our client base.
Yeah, and just to be blunt, 50% drawdowns are something we see in this space a fair amount. Even in Bitcoin, max drawdowns have been declining relative to the to kind of the zero line, meaning they've been rising, meaning improving, but still significant drawdowns from peak. Just the nature of the space.
Yes, exactly. I think this is something that you need to live with if you want to invest in this space. And I think this is also something that probably a few institutional players, they need to get used to that, right? Because of course, if you're an investment manager and you lost 50% of your equity portfolio, then everyone looks at you that you didn't do a proper risk management. If you lose 50% on a crypto allocation, this, I think, yes, it's a risk that you need to be willing to take in order then also to have, of course, superior returns within this asset class compared to equities. But definitely, it's something that I think you need to be willing to take this risk if you want to
Right.
benefit from the upside.
Martin, let's talk about some of the more secular factors at play in Bitcoin specifically, and we can move on to some other ecosystems as well. Talk about where you see Bitcoin in 2024 with regard to the halving, with regard to other secular drivers of price action. How do you think about it?
Well, I mean, this is a very personal view. I think in 2023, many people were debating: is it now still winter? Do we see the beams of spring? I would now say, with what we've seen over the last 2 months, that I think spring has started, but I would also definitely say the summer is not yet here, not by far. So if I sense now the overall bullishness, I think people, they lost the negativity that they were associating with the crypto space, but they are not yet very bullish on this sector. Now, with regards to Bitcoin, I think that we start into this rally at the 50,000 level is, of course, very positive, because, well, this lets me hope that we see very good price levels later this year, because I think many drivers are ahead of us. Number one, I think the halving. Of course, the halving is mathematically, of course, the impact is smaller with every halving, because actually the amount of incremental Bitcoins mined, of course, deteriorates with every halving. So from this point of view, the impact is not as big as from the last halving or the halving before. But I think psychologically it has a halving, because I think people, they also always associate the halving that it marks the start of another bull cycle. Now we just crossed the 50,000 mark. Then, of course, we have other factors. One of them, I mean, definitely the general sentiment in the markets when it comes to the interest rate environment. I mean, definitely we saw that the prices, they were suffering in 2022, 2023, because these interest rate hikes, they may now come to an end. We will see. But if we would see the monetary policy actually loosening a little bit, I think this would definitely fuel risk assets, and Bitcoin would probably benefit over proportional from that. And then let's also not forget, it's an election year. Typically election years, they are quite bullish for equities, but also for cryptocurrencies. And I think all in all, yes, we have quite an attractive risk-reward profile with Bitcoin right now. And then I think what we also see is that new money coming into the space, and I would say the ETF approval was, of course, an enabler, or let's say lowered the barrier for institutional players to access this space. And what we always saw, and what we will definitely also see in this cycle, is people access this space through Bitcoin. So new institutions entering the space, the first allocation will be Bitcoin. For technical reasons, because some will then also want to trade crypto against crypto, but also because simply Bitcoin is by far the most well-known asset. So typically the rally is fueled by Bitcoin, and then other ecosystems, they benefit then later on through the rally.
Martin, we just got a print of 50,000 on Bitcoin while you were laying out some of the bullish case there. Let me ask you this. Do you have a base case or a price target for 2024?
We don't have a price target. I think history tells us that it's very difficult to have a price target. But we are, of course, as a crypto bank, we are positive on the digital asset space as such.
And there you go. There's the chart, Bitcoin crossing 50,000. Okay, let's shift gears here a little bit and talk about what you see happening in the Ethereum ecosystem, which has been lagging, obviously, Bitcoin here for some time. Interesting sort of cycle shift there in terms of the relative performance of those two assets. How do you think about what's happening in the Ethereum ecosystem?
Well, I mean, the Ethereum ecosystem is still by far the largest ecosystem. So I think in general, many positive things are happening there. But as you rightfully outlined, so far it underperformed Bitcoin quite a bit. I think this is one observation, that it's lagging, which is also not something new, right? We saw, I think, the same at the in the last bull cycle. We saw that also the rally was fueled by Bitcoin, and then suddenly Ethereum picked up. We saw actually a similar move happening after ETFs were approved, and I think we saw a sudden spike in Ethereum. Yes, we see here nicely on the chart. I think around this 8th of January, suddenly we then gained like $300 in Ethereum, because I think these, of course, this ETF approval simply attracted all the market liquidity in crypto was consolidating in Bitcoin. Now, I think what we see is, of course, still these ETFs, they soak up quite a bit of liquidity. A lot of liquidity is going into Bitcoin. But on Ethereum, we see, I think, fundamentally still a lot of development activities going on. But I think what we so far were missing is like a spark, right? A spark like we had, for example, on Solana with certain airdrops, which then also fueled a lot of TVL growth and the likes. And in Ethereum, we didn't have this spark. I think the last big spark that we've seen was basically the merge. But since then, there was no big spark. But now, if you look into this ecosystem, then I think, for example, if you look at the TVL growth on many layer twos, that's, I think, very, very, very promising. Then we see that well, there should be scalability upgrades within the Ethereum ecosystem, which makes these layer two much more cost efficient. Then I think there are rumors about potential ZK Sync airdrops, which, based on my understanding, is one of the most promising zero knowledge proof scaling solutions. And I think
talk a little bit about that, about those scaling solutions, zero knowledge proofs. How do you guys think about that? You talking about this idea that Ethereum is the largest ecosystem. I'm assuming you're talking about the smart contract ecosystem. Talk a little bit about what the case that you guys have in terms of ultimate end user adoption, where you see the scaling solution question, and some of those relative merits between ETH and Solana.
Well, I mean, interesting enough, I mean, we now all know that the scaling will probably not happen on the Ethereum layer, but the scaling will happen on these layer twos. So I think this has been decided. Now the question is, of course, which of these layer two is making the race? And yes, is it a layer two solution based on Ethereum, or is it an alternative blockchain solution like Solana, or is it both? Now,
right.
I think the scaling solutions, I think we see that, of course, in terms of bridging and in terms of user experience, if you used Ethereum before, it's of course very convenient because you can use the same wallet, same addresses, and this has many benefits compared to a completely new blockchain. But on the other hand, of course, this also comes with certain downsides. So if you didn't like the user experience with Ethereum, you will also not like the user experience with the scaling solutions, because it's very similar. So
right.
I think in general, we see that the scaling solutions, I think we consider them to be very promising. We also run certain of our technology stack on scaling solutions, because simply, yes, it's more cost efficient, and actually we've close to zero incremental risk. So we believe there is a bright future in these layer twos. But we would now not say that we think that a layer two scaling solution is superior, for example, compared to a Solana or a Cardano or the likes. I think there we simply need to see which ecosystem is able to attract a lot of development activity. I think this is always, there needs to be something happening on the chain, otherwise there is no value. And there we still see that on Ethereum there is a lot of activity. Yes, Solana activity, of course, picked up significantly, but maybe there is also another ecosystem suddenly attracting this liquidity and this development activity, and then overtaking all of the ones that I now mentioned. So
hey, let me ask you this.
Interesting.
Martin, do you see this as kind of a winner take all battle, or do you see this as an ecosystem that could be differentiated, different use cases, potentially different ecosystems, different coins serving those use cases? Or is this something that you see ultimately coming to more of a convergence, winner take all type of situation?
I don't believe that it's a winner takes it all. However, I think there are certain kind of use cases. Let's say, for example, we take, for example, DeFi. I think there are benefits if a DeFi ecosystem is quite concentrated, because you have now, of course, you have these AMMs, you have these certain lending pools. Now we see more and more derivatives, right? Many protocols that they develop derivatives, whether it's like swaps, whether it's like futures, perps, and the likes. And of course, all these like more advanced derivatives, for example, which are built on-chain derivatives, they benefit from all these DeFi ecosystem which already exists. So I think the more DeFi applications already exist, the more advanced stuff you can do then also with on-chain derivatives and the likes. But of course, we have, besides, for example, DeFi, which probably will be 2-3 winners, which will then concentrate most of the TVL in DeFi. There are, of course, other use cases like NFTs, metaverse, gaming, which is, of course, very different and may attract similar ecosystems like this DeFi ecosystem that I outlined, where simply certain components will be built on these blockchains. And then these components make this ecosystem even more attractive. And this can then lead to this winner takes it all, but for a certain kind of use case.
Yeah. Talk a little bit more about DeFi. Obviously, something that someone who's been involved in traditional finance is interested in. Talk a little bit about how you see DeFi developing. Particularly interesting to have it someone from the Swiss jurisdiction, obviously, where there's been a little bit more in terms of legal regulatory framework around this. How do you see the DeFi ecosystem evolving?
Well, as I said, I think of course we see the derivative space is definitely something where we see a lot of action happening, and I'm also very bullish. I think we will also see that certain DeFi will more and more integrate TradFi. So we will see, for example, we see it with on-chain real-world assets. I think then on-chain real-world assets, they will probably bring interest rate swaps on-chain and the likes. And I think these are use cases where I'm super bullish on. If looking at the technology, I think, for example, for derivatives, I mean, the blockchain technology is really a superior technology to like settle and trade these kind of derivatives compared to the traditional infrastructure. So this makes me super bullish. However, you outlined it. I think there is one big unknown factor in this equation, and this is the global regulation. Because I think if we want to see like the billions of, for example, interest rate swaps coming on chain, then there needs to be a certain level of regulatory certainty. Because I think there is a scenario where also large financial institutions, they use this kind of DeFi infrastructure to exchange collateral, to manage risks, to settle transactions. But in order for this to happen, there is probably still some regulatory clarity which is needed, and which is today not yet there. And then, of course, the challenge is, yes, you refer to Switzerland. Of course, you can have a regulatory certainty in a particular jurisdiction, but the beauty and the beast of the blockchain technology is, of course, that it's global. So if you want to exchange the collateral globally, you may, of course, be subject to different regulations globally. So even if you are a Swiss-based project where you have regulatory certainty, or you are a US project and you have regulatory certainty, then you don't know how these may be perceived in a different jurisdiction. But looking at the potential of the blockchain technology and the use case of DeFi, I think this is one of the sectors where I'm particularly bullish on now for the next bull cycle. Yeah.
That was Ash and Martin there. Coming up right now, live at the Crypto Gathering, is a conversation with Jamie Coots and Ash Bennington talking about the crypto macro framework. Friday, we've got another great lineup, including Raoul talking about the intersection of macro and NFTs. We've got Beeple. We're talking art and generative AI with Arsonic and others. It's going to be a great lineup and a lot of fun. It's free. Just register at realvision.com/crypto gathering. We hope to see you there. Take care and good luck out there. Join over 5,000 attendees for the largest AI event in Asia at Super AI Singapore, June 5th and 6th, 2024. Raoul Pal, Benedict Evans, Balaji Srinivasan, Edward Snowden, and over 150 others will join the industry's most influential to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a week from June 3rd through June 9th, with over 150 side events that will make for unparalleled networking opportunities. Visit www.realvision.com/superai for 20% off tickets with the code REALVISION or click below.